So welcome everyone to this week's Symmetry Crypto Week in Review. I'll be your host today. I'm Tim from the editorial team. And today I'm joined by Nathan, our in-house trader. We've got Jacob, who's from the editorial team as well, Nivesh from our research side, and then Thomas, who's also on the editorial as a reporter. So yeah, like we always say, it's been a pretty busy week. No real big stories that have dwarfed all the others, but there's certainly a lot to talk about this week. So I think the first story I wanted to bring up was one that, if you're on places like social media or on Twitter, you've seen probably a lot of discussion about, and that is the Ethereum censorship debate. And this kind of goes back to stories that we talked about in previous week in reviews. If you tuned into those, you'll have heard us talk about Tornado Cash and the US regulatory decisions surrounding that protocol. So it's sort of a continuation on from those kind of discussions. This week we've had Coinbase CEO Brian Armstrong weighing in, and also the Kraken Exchange CEO Jesse Powell also making some comments. So I'd like to send it over to Tom, who's been covering this issue quite closely. So can you guide us through sort of what's been going on here? And what are the key events that have taken place this week?
So, hi everyone. The Tornado Cash sanctions have had a lot of different consequences for the crypto space, and I think people are still trying to figure out what it means. I think the first thing to know is that I'll break down a couple things. With the merge approaching, there's all of a sudden been a big concern that validators, large validators, would need to comply with OFAC sanctions and essentially censor Tornado Cash transactions, or censor any kind of transactions that that come from wallets sanctioned by OFAC. This would mean that essentially Ethereum would have censorship at a very base layer level. The blocks themselves would be censored. The blocks of the blockchain would be censored. So there's a lot of confusion around whether this is possible, whether this is going to happen. There's a lot of discussion on the dangers of this. As noted by a lot of people, members from the Ethereum community, if large validators such as Coinbase, such as Kraken, decide to comply with OFAC regulations in censoring those blocks, it could be considered an attack on the Ethereum blockchain, and the Ethereum community could retaliate by burning their stack, essentially just burning all the stake that these validators have, over Ethereum that these validators use to validate. Brian Armstrong, the CEO of Coinbase, came out and said hey, we don't want to do this. We'd rather not censor transactions on Ethereum, but it's a tricky situation. I feel it's not completely clear for me what is possible, what's not possible. I think it's not very clear for a lot of people. The Ethereum dev team yesterday was talking about options around it. There's just a lot of uncertainty and FUD on that, and I think it is mixed with the fact that the merge is coming quite close, and there's a lot of turmoil just surrounding that. On a related but separate note, DeFi projects on the Ethereum blockchain have started implementing OFAC compliance. So Flashbot is blacklisting certain addresses. There's TRM Labs is offering a product that allows DeFi protocol front end to blacklist Ethereum addresses that have been sanctioned by OFAC. All of this has come with a lot of backlash from the community and everything like that. Basically, everyone's a bit upset, and no one really knows what's going on. but everyone is a little bit concerned. Sorry, that was a bit of a messy breakdown, but that's about the situation.
Awesome. Thanks, Tom. So you're basically saying that there are a lot of entities out there like Coinbase who are validating the Ethereum beacon chain right now. So they've got a lot of Ethereum staked. And when the beacon chain merges with the proof of work chain in the merge, scheduled for 15th of September, I believe, then those validators will then be validating transactions on the main chain. So right now they're just validating people who are staking their Ethereum, but then they'll now be validating all the transactions, and that could include ones that are not OFAC compliant. For example, if someone interacts with Tornado Cash, and then that would mean that they are in breach of OFAC sanctions, and so they would not be able to process or validate blocks that have those transactions in, so that they would be forced to censor them. Is that about right?
That is exactly right. That is a lot better than my own messy breakdown. That's exactly right. But there's been a lot of panic around this, but as some BitMEX research, for example, posted a series of tweets saying that it's not just a case of having to choose between ignoring OFAC rules or censoring Tornado Cash transactions in proof of stake. There's a lot more approaches that validators can go through. Some of which are more or less compliant with OFAC rules. Some of which are very hard on censorship, and some of which are ultimately don't change much for Ethereum users. So it is a case of figuring out exactly what the situation is and addressing the possibilities of it.
Okay, so you mentioned before when you were talking about this how there's a possibility that if large validators like Coinbase decided to censor transactions, I'm not saying that they will. In fact, Brian Armstrong, like you said that the Coinbase would probably choose not to. But if they did, the rest of the validators, even if they're in a minority, could choose to agree that the censorship is taking place and burn the stake of the censorious validators. And what kind of implications do we think that could have? Tom, Nivesh, feel free to jump in here if you have any thoughts on this.
So yeah, that is definitely that is something that could happen, and it would I've seen people say that in that case, it is possible that to avoid getting their funds slashed or burned, large validators could potentially choose to hard fork Ethereum, essentially creating a separate proof of stake chain that would be OFAC compliant. So we'd end up having a permissionless Ethereum proof of stake chain and a permissioned Ethereum proof of stake chain. That being said, I've seen speculation about this. I haven't seen any serious players talk about this as being reality. I think emotions are quite high about what's going on. So, but that is something that could occur. It's important to note that even if Coinbase and other large validators decide to recuse themselves and not censor transactions on the chain, they can't actually withdraw their funds from staking contract yet. The funds are blocked until 2023, as just like anyone else's funds that are being used to stake on Ethereum, and they could potentially. They can still decide, even though they can't withdraw their funds, they could still decide to not validate blocks at all. But that could potentially mean that they'd be hit with inactivity fee. It's called like an inactivity leak fee. And these can go very high. They can go up to 50% of the stake. So it's a bad situation for these validators because they stand to lose money either way. That being said, I'll just reiterate one more time, like, as of right now, large players don't seem to be talking about this yet with great concern.
Awesome. Thanks, Tom. Yeah, so it really sounds like a lot of these players like Coinbase and Kraken and maybe Lido Finance as well are really stuck, or maybe stuck between like a rock and a hard place on this issue. I'd be interested to hear what Nivesh has to say about this. Do you have any thoughts on the Ethereum censorship debate?
Yeah, I was quite surprised when I heard about it. I think Anthony mentioned it on Wednesday, and I was thinking that the implications of it could be far-reaching. It's like we have a lot of like Bitcoin miners in the US right now, so they could tell them to probably not validate transactions and just develop a software in their mining equipments which censors those transactions which are from parties that they don't want users to interact with. So yeah, and it sounds like a lot of speculation right now because they don't even know what Ethereum is right now, and probably USDC and stable coins is one place where their focus currently lies at, and that has seen like the most activity as well. So I don't think they would just go about saying that stop validating transactions, because on what point? Like then you're probably saying that Ethereum is a currency. I don't know, like I might be shooting in the dark here, but it seems like a target on the stable coins, and uh, it shouldn't happen because the other organizations like Coin Center have also filed a case against it, and a lot of people will be lobbying against these kinds of censorship. So I can only hope that it doesn't happen, and it sounds impractical for now. And definitely there's going to be a lot of pushback if the government decides otherwise.
Awesome. Thanks, Nivesh. So it sounds like you're saying it's not your biggest concern right now.
Well, if the rumors spreads and there is fear in the market about it, then probably there is something concerning. But I think it should be a short term thing. I'm not sure. I don't think that they would either force it, or it would be good to comply. Because that would be the end of permissionless blockchains. What's the benefit of having Bitcoin or Ethereum anyway? And I think we are continuing. We can, like, even if they censor a wallet, we can just make a new wallet and do our things. And I think if they start if they want like miners and validators to censor these transactions, then we are going to see more of the protocols like Tornado Cash and mixing things where people will be using this, and the job will be harder for the regulators to track these movements.
Right. I had a similar thought myself where you could make a similar protocol to Tornado Cash and you could deploy it on Solana or Avalanche or basically any other blockchain, and you could do it anonymously and people could start using it, and then you would run into the exact same problem. And yeah, what's going to happen? Will the regulators just outlaw blockchains altogether? It doesn't seem so likely. So yeah, I probably have a similar thought about this to Nivesh. Does anyone else have any final thoughts on the whole issue of censorship on Ethereum before we move on? Tom, I see you've unmuted.
Yeah, like I think the premise for the censorship still comes from censoring. Like the premise for concern is because of this like unprecedented step to censor software instead of like an entity or like a person or like a person or company or nation or something like that. So until we solve that, there's going to be a lot of uncertainty around it because it's like changing the rules of the game, really. But the other thing I want to say is that even if the US decides to like censor transactions on Ethereum or censor Tornado Cash and everything like that, there are, and like I acknowledge that like the crypto industry in the US is huge and it's like the leading force in crypto development, but in my view, it's not unlike a framework to think about it. Maybe like something like the China's like mining ban from last year, where it may force like a the permissionless like blockchain, because I still think like efforts would go into a permissionless blockchain. Like I think those would just be pushed overseas to places where people do not need to comply with any kind of sanctions. But it is very possible that crypto as we know it as a unified kind of like movement kind of changes. So I'm kind of just waiting to see about those two things, like whether geography starts playing more of a role, and whether we get like more clarity over like the software sanctions aspect.
Right. I think like a lot of these issues, we're just going to have to wait and see. And yeah, there's a lot of things that we can anticipate, like the Coin Center have filed a case against the government about this Tornado Cash sanction. So yeah, we'll definitely have to keep a lookout, and as always, we'll be on the news when it happens. Okay, so the next topic that we wanted to dive into for our week in review is a bit more of an uplifting and fun one. So this week, Dogecoin enjoyed a pretty nice rally, and it took along Shiba Inu and some other meme tokens with it as well. And it's all because of the launch of like a new Ethereum compatible chain centered around Dogecoin. It's called Dogechain. We've covered it a few times this week. I know that myself and Navesh have both written newsletters on it. So yeah, I'd like to throw this back over to Navesh to get like his rundown on it. Like, what is Dogechain? Why has it got so much tension? And what's going on there?
Yeah, thanks, Tim. Dogechain is like, I think, the manifestation of the early DeFi markets that I was looking at it from the outside then, and even now it seems bizarre, but it's like a combination of a few things, and I think the most important of them has been degeneracy, which I wrote about in my newsletter, and the other is unit bias, because it's like you make something look cheap and you just say that it's going to 10x or 100x, and somehow people just buy. I don't know why it happens. I would agree. Like, I am not given into unit bias. I don't think I don't see things cheaper when they are in decimal points, but I think the majority of the people do. And so it's like Dogechain. I don't think it's EVM compatible. Uh, it like you can use it with MetaMask, but I'm not sure about that part. Because there hasn't been any bridges with Ethereum yet. But yeah, it's like built by an anonymous person and or a group. I'm not sure. But the point is that you take Dogecoin, which is already a meme stock, and you trade more things that look like Dogecoin but are cheaper. and they might have a fancy page. Uh, they might have some utility as well, but yeah, like it's pretty obvious that it's not going to stick. But the only fact that it has such low liquidity, and it's still early in the market, and so it's possible that you can make good gains, but it doesn't come without risk. There is a lot of risk, and you could possibly end up losing a lot of your money. And it's not like spinning up a new chain and having shit coins on it is new, because I think Binance, if you look at it, has the majority of these kinds of things. But yeah, so Dogecoin is trending right now, and I think we saw another chain, something called Keck chain, which is like using similar ideas, and the pre-sale happened yesterday, and they are going to start trading, I think, later today on Unis. Like the tokens going to start trading. I don't know what other like projects that are going to come up on this new chain. And there is also talk about a Bera chain, which is being backed by a lot of DeFi like Mavens and the whales like Tetranode and DCF God and such. And so that is in the works. And uh, we also had Canto, which was picked in the radar. This is also a new chain, and it's DeFi specific, and it has all the primitives built inside it, such as uh, DEX, a lending market, and probably like futures as well. So yeah, the point is that the trend right now is shitcoins. There are these chains that are popping up, and if they catch on within the social media circles, then some people bridge on it and then heavily speculate on it. So you can get on the bandwagon, but yeah, just as said before, it's very risky, and it's casino money. Just try it out, and maybe and just like a casino, it won't be everything won't be fair as well. Uh, there's going to be a lot of honeypotting, which is something like you can deposit to an address, but you won't be able to withdraw. You can buy a coin, but yeah, you won't be able to use that coin to sell or to withdraw to another address without the permission of the creator. And there's obviously a fear of rug pulls and other things. So yeah,
Are you long-term bullish on Dogechain, Navesh?
no, obviously not. I'm long term bullish on Doge, because it just has that meme value which it keeps on gaining, and the network effect of having been alive for 5 years. Maybe Elon Musk gives it a push, or this time it's Dogechain. But yeah, so that meme value which has prevailed over the last few years is looks like it's going to stay. But yeah, I'm not bullish on Dogechain. I'm not bullish on Canto, or uh, even Bera chain, or the other or Keck chain that I mentioned. But yeah, they are very lucrative short-term plays, and just like the early DeFi days, as I mentioned in the beginning, we had some amazing like protocols which we are still using, but the tokens that they gave us were shit. And obviously it went like it was all liquidity mining craze, and they were just a rent seeking model. So just like that, if we just go and farm new tokens, or trade new tokens by like knowing which of them are going to list so, soon. So I shared some of the tips in my email. I'm not going to go over that, but yeah, so it's like you have to be early. You have to be early on these things, and if you have to act fast, like even if you buy fast, just know that book gains around 2x, 3x, and then preserve your capital and then play with whatever you have gained from it. So yeah, it's like it's risky, but there are a lot of opportunities. So I would just repeat, like Dogechain, I think still has some juice. Chain is gonna arrive soon. Canto, there hasn't been new projects on it yet, but yeah, I think when that comes, then they have, and if you catch them early, then they can give you some good gains. And besides that, Bera chain is highly talked about in the DeFi community. So that is something to look forward to as well.
So I have one more question for you, Navesh, and then I want to pass it over to Jacob because I know that he made a bet on either Sheep or Doge last year. But first, Navesh, what is the distinction here between, say, Litecoin, which has been stagnating for the last few years, even though it has a similar amount of track history as Dogecoin? Why are you bullish on Dogecoin, but not something like Litecoin, which has been around for a long time and has a similar, perhaps, network effect that you can argue about as Dogecoin?
Yeah, honestly, I would say that I'm not as bullish as on Doge as on Litecoin because of the meme value, but I wouldn't shun Litecoin just yet because if you see Litecoin is the first coins to be added on exchanges or on regulated like outlets like PayPal and Robinhood and maybe I think Western Union, but I'm not sure about it. So I wouldn't dismiss Litecoin just yet as well, because if you talk about the real utility of tokens as money or as money specifically, it hasn't happened yet. The only thing that we are seeing is Bitcoin being used as a store of value. And other things, I would say Ethereum has gained usage, but it's not defined yet what it's going to be. So I would say I wouldn't dismiss Litecoin yet. And Dogecoin, yeah, it has the same network effect, but the valuation aspect with meme token is greater there. And so you see Litecoin, people might not be investing in it because no one is seeing any fundamental value in it right now. But Dogecoin is something that can make people rich. So I think that in every bull cycle, this narrative won't die, and it can give you some gains.
Some sage advice there from Nivesh. So basically, we're in this kind of environment where new chains are popping up, quote unquote shitcoins, and that's where the gamblers are going. And there's like maybe two effects that you mentioned that are like fueling this. And there's the unit bias, where a lot of these new coins, they're valued at 0.0000001 of a cent. So people can own 10 million, and they feel like it can go up a lot as well because the price is low.
Yes, if it goes up to $1, how much will I have made?
Exactly. Yeah, that reminds me of sorry, Mitchell, I forgot you mentioned Jacob made a bet on Shiba Inu. That's tangential to this. Do you want to talk about that, Jacob?
Yeah, so, sorry, can you guys hear me okay?
Yeah, absolutely.
Wonderful. Okay. So, yeah, I got in on Shiba in 2021 for, some goofy reasons and some clever reasons, I guess. I'm going to start by saying that Nivesh is right. Unit bias is real. And you can both fall victim to it as well as play on others' willingness to fall victim to it as well. So, for example, I made my Shiba bet in about probably May or June of 2021. I think there were 4 or 5 zeros before the first digit after the decimal point at the time. Not a really modest bet, but I anticipated that it would enjoy one of these spikes like we saw with Dogecoin. Because of that, long term, I think, and I wouldn't bet the farm on this, but it's enough for me to at least hold a little bit. I think there might be room for. So to kind of back up, my vision for the future, and at least the way I think this is going to go, is that crypto is probably going to enable us to have multiple forms of medium of exchange on our day-to-day basis, right? Like we'll have access to spend Bitcoin, we'll be able to spend ETH, we'll be able to spend Doge possibly, or Shiba, or whatever the case may be. And it might be the case that we have 5 to 6 different currencies in our wallets at any given time. I can see something with a small unit bias being used to, buy a cup of coffee, especially if the price is up that day or whatever. Obviously, it's going to take a lot more technological infrastructure for this to be the case. But I think Nivesh is right that the stronger the meme power, the longer the meme power has subsisted so far, the more likely it will continue to live on into the future. So even on these goofy bets, I don't see the potential downside. If you're willing to take a modest bet on these things, and really be willing to lose the farm on it, because these are, Dogecoin, for example, is literally a joke. It's not. It doesn't pretend to be anything but that. I'm not convinced that Dogechain is going to demonstrate any utility or usefulness of any kind, but I could be wrong. But I do think these meme tokens with the unit bias going for them have a long future ahead of them, especially during bull markets. And I think if you're willing to hold on to them and just ride the wave, if you have faith that bull cycles are going to continue in crypto, then I don't think having a meme coin in your bag is a bad idea.
Thanks for that, Jacob. Yeah, I completely agree. What was I going to say? Yeah. Oh, Nivesh, do you want to jump in and make a comment? Fair enough. Thanks for that, Nivesh. Jacob?
I think that's fair. And that's why I want to, you mentioned the phrase casino money earlier. When I put money into a meme coin, that's strictly casino money. So everything I say, and obviously nothing I said in this last few minutes is financial advice directly to anybody here. It's a bet. It's a bet I'm willing to assume with a certain hedge or a certain amount that I'm willing to lose. So, yeah, you might be right, but so far I've seen spikes repeating themselves in the charts, and I'm going to cautiously assume they might repeat.
So I guess to round out this topic, I think I'm really glad you just said that, Jacob, because you kind of helped prove the point that I wanted to make at the end here. And it's something I mentioned in my newsletter on Dogecoin earlier this week. And this kind of applies not only to Dogecoin, but I think also to Ethereum or all EVM networks or even all blockchains, is that regardless of whatever utility may or may not be developed on them, people will always want to gamble in some form. And, in America, there are certain gambling laws, and it's illegal in some places and legal in others. And a lot of people, they go on to crypto, whether it's Dogechain or, Binance Chain or wherever, and they go and buy these real low cap coins in the hopes that, they'll hit big. It's basically going to the casino table. And I think that, it might be a bit cynical, but I think that that's a very powerful thing. Humans are going to keep wanting to do it. And that's going to keep propelling. It's going to keep generating users for these blockchains, and then users equate to buyers. Because if you're using Dogecoin or Dogechain, you got to buy the Doge first. If you're using Ethereum, you have to buy Ethereum for the gas. Tom, do you want to get in here finally, just real quick?
Yeah, just wanted to support your the casino thing. I have a friend who refuses to buy anything except meme coins. And I've kind of made fun of him for it, but he once explained what his strategy was for. He plays dark coins on Polygon, and he explained to me what his strategy was, and it was an actual like he had spreadsheets on like all the coins that launched, like their performances, their like what they were doing like the first day, the second day, and everything like that. Like he was like scouring through Reddit, through community discords and everything. But like he had a whole system like set up, and did not care anything about anything that was going on in crypto. It was just like literally treating it as a casino, but as like not just as a casino for fun, but like as someone, as a professional bettor would treat a casino, I guess. Like, you know, professional like poker players and stuff like that. So yeah, I just wanted to like add to your last comment with this.
It's really interesting, like that he's gone to that much effort. Do you know if he's making money on this?
He made a lot of money. He lost a lot of it. He sounds to me like he's just perfecting his system. But he's the person who's made the most gains that I know personally. But he's also the person who's made the biggest losses.
Right. So I guess you gotta know when to hold them and when to fold them, so to speak. Like no, or maybe just know when to get out. I should say, really, you know, with your profits intact. Okay. So next topic on our list for today was, well, it's sort of two pieces of news here. The first one, I think, was on Tuesday, a kind of an update from Celsius. So their CEO, Alex Mashinsky, it was revealed that he had been using Celsius's funds to do a bit of trading himself, you know, playing the markets. So according to this Financial Times report, well, actually, maybe I should throw this over to Jacob and let him explain. I wasn't around during our part of the week, so I think Jacob can give a better rundown on this story. So take it away.
Sure. Yeah, thanks, Tim. This is one of our bigger hitting stories this week. For whatever reason, I suppose people are interested in what was going on behind closed doors at Celsius. Just a brief recap. You guys already know most of this. Celsius paused withdrawals in June, later filed for bankruptcy, and it's trying to restructure in order to sort of make customers whole. But it's got this weird plan where you can either, I'm not sure if this is set in stone yet, or if it's still going through the courts, but their plan is basically to either partially recoup users now or allow them to go, you know, long crypto, which is to say, we won't return your money, and then if the market picks up, maybe we'll be able to return it then. But of course, you all are also familiar with the terms and conditions of a company like Celsius. Basically, when you agree to use the service, you are agreeing that you're essentially signing over custody of your assets and funds to Celsius. They can do whatever they want, whatever they deem fit, and they are not. They've tried to write this legal language into their terms and conditions to basically say that if things go wrong and we are not able to return your money, we do not have to. So that's what we know. This week, it came out through a Financial Times report that Alex Mashinsky, the CEO, back in January, sort of unilaterally decided to take over the trading desk himself, if this report is accurate. So in January, according to the Financial Times, just ahead of the Federal Reserve meeting, Mashinsky was worried that potential interest rate hikes would crash the market. So he began to, according to the Financial Times reporting, he in one instance sold hundreds of millions of dollars worth of Bitcoin. The company bought it back the next day at a loss. He overruled the senior traders who had decades of experience. He even went head to head with the company's chief investment officer. There's this, according to FT, as much as Celsius lost as much as $50 million in January alone, the month that Mashinsky allegedly began more unilaterally directing the company's trading efforts. So obviously, I don't know the extent to which this is a legal problem. Like Mashinsky is the chief executive officer of the company. I'm not sure I don't know if he has this authority or not. Given the way that they're willing to write their terms and conditions, it seems like there's a lot of wiggle room within Celsius's operations. that maybe he's allowed to do this. I don't know if there's actually a crime involved here. I really don't. But this is the kind of behavior, just from a personal take. It's the kind of shenanigans that powerful people get up to, and then we get suspicious of them for, right? Like, you have a team of, I was reminded of reporting a few weeks ago that, not to draw unnecessary comparisons, but there were reports that Dogecoin was warned by his team that Anchor's 20% yield was unsustainable, that it would collapse eventually, and Dogecoin, being the man in charge, decided, to hell with it, my way or the highway. And it seems like Mashinsky is kind of following that kind of leadership style, and in both cases, it's gotten them into trouble. So, I guess this is kind of a cautionary tale about dictatorial impulses. Like I say, I think, what is it? Celsius has something like $1.2 billion that it's a black hole in its books, and owes something like $4.5 billion to customers, and they're just kind of waiting for a bull market to trade their way out of it, I guess. Strikes me as a pretty irresponsible decision, but again, that's just my personal take. I'd be curious to hear how the rest of you guys take this news.
Well, for me personally, I was, you just can't help but laugh whenever I hear the kind of things that have been going on in the previous bull market. There was one trading firm from South Korea who managed to, I think they were using a trading bot, and they managed to lose all of their funds shorting UST, which I still can't wrap my head around. They must have quite literally, I don't know. It's just crazy how sort of like reckless practices can end up, causing so many funds to be lost. And, I got a feeling that this won't be the last startling revelation we hear about Celsius and what the people running the company were doing behind closed doors. I mean, what do you think?
Well, I think this is one of those instances that's going to be used as a example of why certain kinds of regulations are needed, and it's owing to human nature. We did another story this week, or maybe it was a newsletter. What was it? Tim, you may remember, Chris wrote about it. It was the Gabagool.eth story. A guy, was it
Optimism? No, was it Velodrome?
Velodrome, that was it. Yeah, Velodrome had a member of its community who had access to its wallet, basically get themselves into trading trouble, tried to quote unquote borrow the money from the treasury, and then when they realized that they really, really screwed up by doing that, they tried to give it back, come clean. But all of these instances kind of demonstrate this sort of human impulse to make rash decisions when cornered, especially financially. And I don't know what safeguards against that kind of panic behavior necessarily look like, especially in this space. But it does seem to me that, I can't get into Mashinsky's head, but I don't know. Definitely some kind of rash decision making going on there. So I don't know what those guardrails look like, but it does seem like a discussion about them being there should maybe take place.
Yeah, absolutely. I mean, no one's impervious to this impulse, and it was, I think, really good that you brought that up, because it is exactly the same kind of thing. When people get cornered, or like they think that they need to revenge trade, make all the money back, and then they just dig themselves further into a hole. I guess like a lot of DeFi protocols, they have multi-sig wallets. They're supposed to try and avoid this kind of stuff, so someone can't take a bunch of funds and trade with them without the consent of everyone else involved, for example. And so that might be one option that's sort of crypto specific.
Do we know why that safeguard wasn't in place in Velodrome?
I actually don't, unfortunately. I didn't look into it to that extent. Yeah.
Okay, we'll look into that and maybe revisit next week.
Yeah. Does anyone else have any thoughts on Alex Mashinsky's trading blunders before we move on? Yeah, Tom.
Just building on your points, both you and Jacob's points, but it reminds me of Arthur Hayes when he was criticizing 380's practices. He was saying that essentially they burn themselves by leveraging up and starting to take like directional trades instead of the arbitrage like trades that had like gotten the initial success. So I kind of get the same feeling from the Mashinsky thing, which is like, it turns out the degens are not just the ones you see on Twitter playing with their own account, but there's a lot of people, there's a lot of companies that could have done amazing if they just like tried to survive, which is the advice that people are given like all the time, like retail is given all the time. Just try to survive and don't try to like, you know, blow yourself up. And a lot of companies that like this advice turns out like applies to a lot of companies as well.
I think that's a really good point. The degens aren't just, you know, the people on Twitter shitposting. They can also be the CEOs of multi-billion-dollar companies. And yeah, it's probably worth remembering that. Okay. So yeah, like we always do, as we're coming closer to the end of this week's review, I'd like to spend some time to talk about the markets. And this week especially, as we've had quite a violent downturn in the crypto market this morning. And I believe it has something to do with the options market and some volatility connected to that. So I'd like to hand it over to Nathan and get the full rundown from him. What's going on? What's caused this crash? And what kind of, what are your thoughts going forward from here?
Yeah, thanks for that, Tim. I guess there's going to be lots of people pointing to lots of different reasons why the market's declined. It's hard, I think, to put your finger on one particular catalyst. So I think I'll probably talk about what I think are the number, like 3 catalysts that are probably driving this. So first of all, I think we probably have to look at the US dollar. So the US dollar, what's been going on with the US dollar lately, it's been in a period like Bitcoin, where it's basically been having a bit of a sell-off, being sold off against other currencies. So that's completely reversed this week, and I think it's had its strongest week in 2 years, and that's really started to accelerate over the last 2 days. So you'll notice as well that Bitcoin has followed a similar path, obviously, where Bitcoin has an inverse relationship with the US dollar. So the US dollar gets stronger and typically cryptos get weaker. So we've seen big moves against the British pound, and the euro's back pretty much towards parity now again. And I think what the currency market is probably flagging is that the US dollar looks like it's set to move into another much higher trading range. So that could be the next bearish catalyst for Bitcoin. And the worrying thing is that I think if we are going to see the US dollar moving into a much higher trading range against other currencies, and then that probably means that Bitcoin's going to settle into a much lower trading range. So the rally that we've had, it more or less looks to me, based on the trading volume that we've seen, and the amount of time, say mid-June to nearly the end of August, to get to say 18,000 to 25, and we spent enormous amounts of time failing at 24, and 25 was a big stretch. So it does look like this is a bear market rally that's currently topped out and it's being sold off. So that's very, very worrying to me. So I think we've broken underneath the 50-day moving average, the 200-week moving average. There's no real support under 20,700. So for me, it does look like, especially if we've got the dollar breaking down, that we're going to see a continuation in the market, and we weren't, going to be lucky enough to see maybe a 26,500 or a 27,000 Bitcoin, which could have set up a much more attractive short, or even a 30,000. So that doesn't look like it's going to happen, and it does look like the market's going to, continue to head lower based on what I'm seeing today. options market, yep, I wrote about that today in Pro BTC. It does have a lot to do with it. There's obviously a lot of options activity going on in the Nasdaq, and you're seeing that the Nasdaq is down today. And I think the other major factor is the global economy. There's so many people now that are turning bearish towards the global economy, that the indicators that are coming out of, say, China, inflation in Europe, it does look like it's going to be the case that into the year end economic data is going to continue to dip, and I think that's also being priced into the cryptocurrency market. So with all those factors, plus the other factors, the regulatory factors, the stuff with Cardano, that's just happened, and I think it's just a very, very tough market to be bullish towards, and it does look like with the dollar breaking out again that things are going to get considerably worse. And if I'm honest with you, if you wanted a price target off me, I wouldn't be surprised. Now we've failed up in the top end. If we see the Federal Reserve, which is obviously another factor that I haven't talked about, it's obviously another big factor why the dollar is rising, because several Fed members have come out and said, inflation, we still need further aggressive rate action despite the FOMC minutes and the high CPI data. We're still seeing the consensus at 50 or maybe even 75 basis points. So the market's again starting to reprice that. So I think if we did, start to fall again in September, I wouldn't be surprised to see September or October Bitcoin trading towards 12,000 again. So I've got to recalculate my figures based on what I'm seeing in the price action. It just looks very horrible at the moment. So yeah, it does look like the rally has topped out, and we're going to be heading lower. So those are my overall thoughts at the moment.
All right, thanks a lot for that, Nathan.
Thank you.
So not looking great out there, unfortunately.
Yeah.
Oh well. In the remaining minutes, I think it would be a good idea to maybe pass it around to everyone and get their take on how they're navigating the market at the moment. I can say for myself, I was hoping, like Nathan, for things to go a bit higher. It seems like that's not the case, and I'm going to have to reevaluate. So yeah, I might be looking to consolidate. Anticipate some lower prices perhaps, so I don't get stuck. Jacob, Nivesh, Tom, do you have anything to share? What are you up to regarding like your investments in trading these days?
I'm mostly doing nothing, just sitting on my hands. The main change in strategy I've made over the last month is that you guys that I traded in some of my Bitcoin for ETH. Like, just for full disclosure, I guess my bags are mostly Bitcoin and ETH. It used to be mostly weighted towards Bitcoin, and it's a little more weighted towards ETH now in anticipation of the merge. But other than that, not doing much, to be honest.
Yeah, I was in a similar position as well. I've definitely gone heavier on ETH on the pullback we had where we reached the lows. Hoping it'll still outperform Bitcoin, but who's to say? Tom, what are you thinking?
I'm usually a really bad trader, but I've been very lucky with the price action. I got into ETH I got into ETH like at 1,000, and I sold it at like 1,900. I can't believe it worked out. I was a little bit sad that I hadn't sized up enough, but I've been reading quite a lot about inflation possibly being persistent, and I'm very worried about the energy situation in Europe for the winter. So that tends to just make me cautious. I don't really have any idea of I don't know if we've got a bottom on Bitcoin or ETH or anything like that yet, but I do think if we revisit those lows, I'll probably size up. But as of right now, I'm just playing it day by day, really, and just trying to see good opportunities.
Yep. Congratulations on that. I mean, you should take the win, even if you didn't buy as much as you wanted to. It's it's not difficult. It's a difficult market to trade from everyone I'm listening to. So you got to take the wins when they come. And I should probably ask Mitchell as well, because I remember the last time I heard from him, he was considering starting to like more dollar cost average into things like Bitcoin and ETH. So are you still doing that, or what's your outlook, Mitchell?
I sense the fear. I see it in Twitter. I see it in people's eyes. They're afraid. This is the time.
The time to buy?
Exactly. I'd be a little bit funny, but yeah, I think this is sincerely the time to buy, because the potential entry points, I don't see Bitcoin dropping below like 11,000. Will I be angry if it drops to like 15K and I bought it at 23? I mean, no, not really. I'll be a little bit miffed, but it's not going to be the end of the world. I will be more frustrated if Bitcoin goes on a tear again within the next 12 months to say 30 or 40,000, and I didn't take this opportunity to buy, perhaps not the bottom, but somewhere close to the middle to the bottom side of things.
Right. So it's kind of like it's a better risk reward buying, or at least dollar cost averaging in now, in the hopes or in anticipation that things will go higher, than the sort of downside, than trying to time the bottom kind of deal. I've seen a lot of people say similar things as well.
I don't think it's possible for me to pick it can be very difficult to identify the very bottom if it's not acute, like we saw. Was it in March of 2019 where we saw the cascading liquidations, and it was clear that this is probably a localized bottom? If it's just kind of drawn out like it was in 2018 following the 2017 run up, and it's just, continuous sideways with slightly lower lows, then it's going to be extremely difficult to say this is where the bottom's going to be at. So I think just dollar cost averaging and knowing that and being prepared for it to go lower, and in my case 50% lower, and being okay with that, I think that's key to not getting psyched out, or when the market moves, acting impulsively, resulting in you selling at exactly the most inopportune times.
Right. Very sage advice there. Okay, so we're coming up to the hour now. So unless anyone else has anything else they want to add, I think it's a good point to wrap it up. So from everyone at Symmetry, thank you very much for tuning in this week. I hope you all have a great weekend. Stay safe, everyone. Bye.
Have a great weekend, everybody.
Take care, everyone.